I think the biggest problem with cryptocurrencies is that people are obsessed with this idea of getting rich fabulously fast.
As some of you might be aware, the founder and creator of Cardano is extremely active on YouTube. I've got to say, I find him an incredible source of well-reasoned arguments both for, but most importantly, against the current crypto movement. So in today's video, I want to draw your attention to a segment on one of his most recent videos and give you my take on what you need to be thinking about to ensure you don't lose a good chunk of your investments. Before I jump into this though, I just wanted to give a really quick shout out to my patrons. So thanks to Rob, Jake, Tony and Stephen. I really appreciate your support. I'll put a link to my Patreon in the description below if you're interested. So let's dive right into what Charles had to say, and I'll give you my reaction and my thoughts on what he had to say for himself. Over to Charles.
I think the biggest problem with cryptocurrencies is that people are obsessed with this idea of getting rich fabulously fast. They love the concept that they can put $1 in and somehow that magically, through no work of their own, turns into $100.
There's no denying this statement. We are all part of this problem. I personally wouldn't be investing into crypto if I didn't think that on balance that I wouldn't be wealthier by the end of it. I can't say that I love the technology as such, but I do love the opportunities it might open up for us in terms of increasing the value of my investment. The problem you have at the moment is that everywhere you look, you'll see news story after news story about somebody making a lot of money in crypto in the blink of an eye. This creates a self-fulfilling prophecy as more and more people pile in. I'm not even close to innocent in this, and I am very much part of the problem. I opened up my crypto portfolio back in March and I've posted monthly updates on it ever since. And each time it just gets bigger and bigger, to the extent where it's over doubled now, and I'm sure it might grow even more before my June update. I am not naive in thinking that some of my viewers would have seen this and gotten a little bit of FOMO, fear of missing out, and taken a plunge into crypto. I don't necessarily have a problem with this, but it depends on 3 factors. 1. Is it within the individual's risk tolerance, as crypto is insanely high risk? 2. Can they actually afford the money that they're putting into it in the first place? And then lastly, have they actually got solid investments behind this, or is crypto their very first investment? Depending on your answer to these 3 things, this will give you a steer on if you should be investing into crypto or not. For me, it's within my risk tolerance as it's a very small percentage of my overall portfolio, and I already have a well-established investment on Vanguard and other various platforms. If this money disappeared tomorrow and my crypto value went to 0, my quality of life wouldn't change one bit, either now or in the future. If you think your investment is going to go up in a straight line and you're just going to receive insane profits, then you really need to consider selling out. Anyway, Charles had a little bit more to say, so I'll throw it over to him.
And I got news for you. And every single industry where that occurs, only a very small group of people get fabulously lucky and everybody else loses their money. So if that's your goal, that's what you seek to do, where you want to go with all of this, 9 times out of 10, you're probably going to end up broke. Just like the gold prospectors in the 1840s and 1850s, traveling to Colorado, traveling to California, seeking silver and gold. It's absolutely true. A few of them did find it. The vast majority of them did not, and they ended up suffering because of it.
He is absolutely spot on here. Insane growth like we've been seeing now is shown to be very short-lived. Where do we start? Charles already pointed out the Californian gold rush in 1848, where over 300,000 people moved from across the world to California in the hopes of finding riches. But then we also have TULIPMANIA in 1637, where tulip bulls hit the equivalent of £500,000 worth in cash today before crashing incredibly hard. And lastly, and most recently, we had the tech bubble in the late 90s, 2000s, which crushed the S&P 500 when the bubble finally burst. The S&P 500 didn't surpass its all-time high until 13 years later. Let me be clear, the vast majority of people who got involved within these 3 manic episodes lost money and suffered because of it. Their eyes were initially filled with dollar signs, but by the end of it, they were left with less money than they had at the very start. And on top of this, they'd lost a considerable opportunity cost as they lost resources in terms of time and money. But Charles highlighted one point: 9 out of 10 people will lose money. So who are the 1 in 10? Well, in the gold rush, it was the one selling shovels. During TULIPMANIA, it was the growers and sellers of tulip bulbs, and in the tech bubble, it was the tech startup founders and the stock exchanges which made a commission on people buying and selling their stakes in these companies. That's not to say people aren't making money from purchasing and acquiring the raw materials and then selling them later at a profit, but these people are few and far between. It's incredibly hard to sell at your position at a profit when the market just seems to be going up and up and higher and higher. Based on this, I think it'd be healthy to look at who are the people within the crypto space who are making bank without taking the same risks that the rest of us are. Not all of us are in the same boat. Well, the first big winners are the crypto platforms, Crypto.com, Binance, Coinbase. They are all taking slices of the profits for all the transactions that we make. The more people who rush into this space, the better. Just look at the Winklevoss brothers. They always seem to be in the right place at the right time. And what have they done in crypto? Well, actually, they've gone on to create Gemini, which is a crypto exchange. I wonder why. On top of this, the good old stock market is starting to get their slice of the action as well. Only in the last few weeks, Coinbase IPO'd in the US and did incredibly well. So now the exchanges have actually got listed companies on there, so when people buy and sell these exchanges, they're making a bit of commission too. Obviously, the creators of the individual cryptocurrencies themselves are making bank. You might not know this, but it's quite commonplace that creators of cryptocurrencies keep a large portion of the crypto for themselves. This means they can take a profit at a later date as they increase the value of their own cryptocurrency. And then lastly, there's people like me. You might raise an eyebrow at this, but hear me out because I'd like to be transparent. Every time you use an affiliate link, there's probably someone behind the scenes receiving a commission in form of an affiliate program. So for me, for example, I've actually earned over $700 in free crypto from people signing up to Crypto.com. For this to happen, they do have to hit certain requirements. But as of recording this, I only need to do this about 7 more times and I've actually covered my initial investment into crypto. So am I really taking the same amount of risk that you are? Probably not. These are the sorts of things that you need to be mindful of. Who are the ones talking about cryptocurrency? And what do they have to gain from you jumping into the market? For me, I've actually never asked anybody to buy 300 quid's worth of CRO and to reserve the Ruby Red card, which are both requirements for me to get a commission on Crypto.com. But if they do this themselves, I receive a commission. But you might have noticed when I push the referral link, I'm actually encouraging people just to sign up for an account to get $25 for free. I don't get any benefit from this. This way, I can sleep at night knowing that I've not asked anybody to put their capital at risk, as it needs to be their choice. So if you are invested into crypto, you might be feeling a little bit flat, so let me give you some ideas to consider alongside some context for the situation we're currently in, and try to identify the best strategy possible to get the most out of our money. Firstly, it is never too early to take profits. If you're in the fortunate position of being able to take out your initial investment out of your portfolio and then for you to still have quite a chunky portfolio left over, then I think you really need to consider actually withdrawing some money out of your portfolio and banking that profit. I'm actually going to share some data later which might make you want to strongly consider this option. The second is there's actually plenty of ways to build a crypto portfolio for free. Yes, free. So if you want to get involved in the crypto space, but actually don't want to put any of your own capital at risk, because at the end of the day, you've worked really hard for that capital, then I've actually done a video all about this subject. I'll put a link somewhere in the top right. But in terms of what strategy you might want to look at, I actually think that Warren Buffett gave an excellent example of how we should be thinking about the crypto space right now. Let me throw you over to Warren from his latest shareholder meeting, which actually happened only 2 weeks ago. Over to Warren.
There were at least 2,000 companies that entered the auto business because it clearly had this incredible future. And of course, you remember that in 2009, there were 3 left, 2 of which went bankrupt.
Does this sound familiar? A boom in new players entering a market when a new technology appears, but then only a handful survive the test of time. Car companies, tech companies, and then the crypto space looks eerily familiar to this. Right now there's over 4,000 cryptocurrencies, and let's look at how the market cap has grown over time. Back in April 2017, the crypto market cap, so the whole of the cap for the whole of the crypto space, was just 28 billion. Over the next 6 months, it ran up all the way to nearly 600 billion before the bubble burst a bit back down to 100 billion. It then bobbled around for about 3 years until the latest bull run. In September 2020, the market moved from 343 billion all the way to 2.3 trillion in just 8 months. And at one point, the market doubled just within 1 month from 1 trillion to 2 trillion. There's no denying that this has all the hallmarks of an extreme bubble forming around a new and exciting technology. I think it's reasonable to expect that this bubble could burst and for it to lose 80% of its value, which could destroy a lot of people in the process who would end up selling out their positions at a significant loss. I think it would be reasonable to think that in 50 years' time, out of the 4,000 cryptocurrencies that exist today, only a handful are going to survive. Just like Ford is the survivor of the auto industry, and then maybe Amazon and eBay being the survivors of the tech bubble. So with all this being said, does being all in on just one cryptocurrency sound like the best strategy? I would say not. For this reason, I am broadening my portfolio as much as possible. I want to give myself the best possible chance of owning a piece of the Apples or the Amazons at a very early stage in their lives, so then I can get super returns over the next 20 to 30 years. This means that I do expect the vast majority of the currencies that I currently hold to go to zero over time. I would love to know your thoughts though. What can you see happening in the crypto space? Do you agree with Charles? Do you agree with me? Let me know in the comments below. Anyway, that's all for this video. See you in the next one.